All right, let's jump straight into it. Welcome, CMA candidates, to this explainer. Today, we are totally demystifying Cost Accounting Standards 5 and 6. My goal here is simple. I want to help you master transportation and material costs so you can walk into that exam feeling absolutely confident. We're going to take all the highly technical language of these standards, break it down, and make it stick in your memory for good.
Here's our quick game plan for today. 1. Why CAS 5 matters. 2. Objectives and scope. 3. Maintaining transport records. 4. Linking to material cost. And 5. Key exam takeaways. Let's get started.
Section 1. Why CAS 5 matters.
You know, understanding the why behind a rule makes it so much easier to remember, rather than just relying on rote memorization. For CAS 5, our historical anchor is the Finance Act of 2003. This act literally made standardizing transportation cost records a strict legal necessity. See, before this, the general accounting principles for tracing costs were already out there, but there was a desperate need to standardize how we kept records so we could accurately calculate deductions for the assessable value of excisable goods, whether they were for home consumption or export. That requirement right there, that is the regulatory heartbeat of CAS 5.
Moving on to Section 2. Objectives and scope.
Okay, listen up, because examiners love to set traps here. They will try to confuse a standard's objectives with its scope. You've got to keep these two distinct in your mind. Objectives are the big picture goals, things like bringing uniformity to how we determined averaged or equalized transport costs, providing transparency, and prescribing the actual systems for maintaining records. The scope, on the other hand, is the practical application of those rules. It's how the standard is used for things like insurance claim valuations, working out inward freight costs, or, to use a very specific example from the text, calculating freight subsidies under the Fertilizer Industry Coordination Committee. Just remember, objectives are the goals, scope is the application.
Section 3. Maintaining transport records.
To really get how CAS 5 wants us to keep accounting records, try picturing the physical journey of a product. The magic word here is separation. You absolutely must maintain entirely separate records for every single step of a product's journey. CAS 5 explicitly says you need isolated records for the inward movement of materials during procurement. Then, when a product is ready to go, the outward transport from the factory to the depot needs its own separate tracking. And here's a big one. If you send material out to a job worker's place and bring it back, those transport costs require their own separate records too, so they can be accurately rolled into the transaction value.
But hey, what if a manufacturer doesn't hire an outside transport company? What if they use their own fleet of trucks? Well, the examiner expects you to know that the operating costs for those specific vehicles must be meticulously recorded. We're talking super granular details here. You need to record the salaries and wages of drivers and cleaners, the cost of fuel, lubricants, and grease, and highlight this one in your notes. You must include the amortized cost of tires and batteries, along with repairs, maintenance, depreciation, and even the exact distance covered and trips made. All right, pay close attention, because here is another massive exam trap. Under CAS 5, records for transport costs related exclusively to trading activities must be kept completely separate from everything else. Why? Because they will never, ever be included when claiming a deduction to calculate the assessable value of excisable goods. Trading transport costs exist on their own little island. Do not mix them into your general manufacturing transport calculations.
Section 4. Linking to material cost. This is where the magic happens, and these two standards actually talk to each other. Under CAS 6, which is all about standardizing material costs, and just as a quick aside, it specifically excludes packing materials because those get their own separate standard, the inward transportation costs from CAS 5 don't just vanish, they are directly absorbed. Direct material costs are defined as the raw materials consumed for production. This explicitly includes the purchase price, duties, taxes, insurance, and yes, the freight inwards that we just learned how to calculate. It's all just part of the total cost of procurement.
For the actual math on your exam, knowing exactly what to add and what to deduct is going to save you major points. When you are determining direct material cost, always add the purchase price, freight inwards, duties, taxes, and insurance. But, and this is crucial, you strictly deduct any trade discounts, rebates, duty drawbacks, and especially any government subsidies or grants you receive. CAS 6 specifically says subsidies have to reduce the cost. Oh, and watch out for demurrage or detention charges. CAS 6 dictates that these highly specific items need to be carefully handled and disclosed when doing material cost statements.
Which brings us to a huge,
Absolutely non-negotiable rule that applies across both of these standards. Abnormal costs are always excluded from your computation, period. Whether we are talking about abnormal waste, spoilage, or defectives under CAS 6, or some crazy abnormal transportation delay under CAS 5, you have to identify it, isolate it, and strip it entirely out of your average cost calculations. No exceptions.
Let's wrap it all up with Section 5, Key Exam Takeaways.
Let's lock all this into your brain so you can secure these points on test day. Remember, CAS 5 standardizes the rules for average transportation costs. You absolutely must maintain separate records for inward, outward, trading, and job worker transport. If a company runs its own fleet, remember the granular data requirements, like amortizing the cost of tires. Then, CAS 6 steps in to absorb that inward freight directly into the material cost, while explicitly leaving packing materials alone. And finally, subsidies must be deducted, and abnormal costs are strictly 100% excluded.
Before we sign off, I've got a quick scenario to test what we just covered. Imagine a sudden, unexpected labor strike causes a massive delay, heavily spiking the inward freight costs on a shipment of your raw materials. Do you absorb that inflated cost into your inventory under CAS 6, or do you exclude it? Think carefully about the vital rule of abnormal cost we just went over, and use that logic to conquer your CMA exam.
Look, if you're deep in the trenches prepping for your CMA exam, you already know that cost accounting standards can sometimes feel like just an absolute wall of dense regulatory text. But today, we're going to fix that. We're translating all that heavy jargon into a clear, visual study guide to help you completely master Cost Accounting Standards 7, 8, and 9. We'll be spending some extra time on CAS 7, employee costs, because honestly, it forms a massive foundation for effective cost management. The goal today is to make these concepts really stick so you can walk into that exam room feeling absolutely bulletproof. Let's get right into it.
So think about this for a second. How do we actually ensure consistency in cost accounting across entirely different industries? I want you to keep this big question in the back of your mind as we go. For the exam, remember that the core problem in accounting is often just a total lack of uniformity. Without strict rules, it'd be the Wild West, everyone calculating costs differently, making comparisons literally impossible. Well, these specific cost accounting standards, they're the solution to that problem. They establish the exact language that makes business transparency possible.
Here's our roadmap for today. 1. Mastering cost accounting standards. 2. CAS 7, employee cost basics. 3. Measuring employee costs. 4. Tackling idle time. 5. CAS 8, cost of utilities. And 6. CAS 9, packing materials.
Okay, kicking things off with Section 1, Mastering Cost Accounting Standards and Building that Framework for Uniformity. When you're studying, it's super helpful to treat each standard as a distinct module made up of objective, scope, measurement, and disclosure. But here's a massive shortcut for you. Whether we're talking about employees, electricity, or cardboard packing boxes, the overarching objective is exactly the same. This is a universal truth for CAS 7, 8, and 9. They all exist to bring uniformity and consistency in determining costs with reasonable accuracy. If you get a multiple-choice question asking for the primary objective of any of these three, you immediately look for the words uniformity and consistency. That's your golden ticket.
Moving right along to Section 2, CAS 7, Employee Cost Basics, the Human Element.
All right, let's crack open our most detailed standard, CAS 7, which deals with exactly how we determine employee costs. For the exam, you'll want to lock in paragraph 4.5. It states that direct employee costs must be attributed to a cost object in an economically feasible way. The whole concept here hinges on traceability. Basically, it means tracking this specific labor directly to a product or service makes financial and practical sense. You're not spending $1 to track 50 cents, right?
On the flip side of that, we have paragraph 4.10. Indirect employee cost is the employee cost which cannot be directly attributed to a particular cost object. A classic, heavily tested example of this is the salary of a plant supervisor. Because their time and effort are spread across the entire factory and multiple production lines, it's considered indirect labor. We don't tie it to one specific product. Instead, it's treated as a factory overhead cost.
It's really helpful to visually contrast these two. Understanding what a concept isn't is just as critical as knowing what it is. Direct costs, economically attributed straight to the object. Indirect costs, they can't be, so they just get dumped into the overhead bucket. When you're preparing actual cost statements, direct employee costs have to be presented separately.
Meanwhile, those indirect costs are bundled up into specific overheads, like production, administrative, selling, or distribution overheads.
All right, part 3, measuring employee costs, or the rules of ascertainment.
Let's see how we actually measure these figures under CAS 7. When you're sitting in the exam room, just visualize this simple 3-step playbook. Step 1. Compute the gross pay. This includes all allowances, bonuses, and any remuneration to managerial personnel. Step 2. Add the employer's cost of providing benefits. You also have to account for separation costs or any treatment of variances at this stage. And Step 3. This is a frequent trap on exams, so heads up. You must explicitly exclude any imputed costs. Do not let them trick you on that.
Now, measuring is only half the battle. Your cost statements must be incredibly transparent. CS 7 lays out some strict mandatory disclosures. You have to disclose employee costs attributed to capital works, separation costs, and any excluded abnormal costs. Plus, if the company received any subsidies, grants, or incentives, those must be logically reduced from the employee cost and clearly disclosed. You've also got to call out penalties, payments to related parties, costs in foreign exchange, and, this is a big one, any material, significant, and quantifiable changes in your accounting principles.
Section 4. Tackling idle time, normal versus abnormal.
Okay, this is where things get notoriously tricky. Idle time. Paragraph 4.8 is your authoritative reference point here. It defines idle time super clearly. It's simply the difference between the time for which employees are paid and the employee's time actually booked against cost objects. Essentially, it's the downtime. It's the time you paid your workers for, but no specific productive work was actually happening or attributed to a cost object.
And here is the magic formula from paragraph 5.6 that you need to commit to memory. Cost of idle time is ascertained by taking the idle hours and multiplying them by the hourly rate applicable to that specific idle employee or group of employees. The math is straightforward, right? But the real test, the thing you'll be graded on, is how you actually treat that cost in the books.
This is where we have to separate the normal from the abnormal. Normally, idle time cost is either assigned directly to the cost object or treated as overhead, depending on what's economically feasible. But here's the catch. Abnormal situations, think a major worker strike, a sudden factory lockout, or a severe accident, those result in abnormal idle time, and that is treated as an entirely separate cost item. It is explicitly not absorbed into the standard cost. Instead, it gets charged directly to the specific job affected, which lets management investigate what went wrong and put preventative measures in place.
Up next, Section 5, Cost of Utilities, keeping the lights on.
The human foundation is laid, so let's get the machines running with CAS 8. This standard handles utility costs, but pay close attention to the exclusions because examiners love testing them. If a factory generates excisable utilities for captive consumption to figure out a chessable value, you don't use CAS 8, you use CAS 4 instead. Also, if a company's primary business is just generating and selling utilities, CAS 8 doesn't apply to them at all. And finally, anything to do with carbon credits, entirely excluded. That's dealt with in a completely separate standard.
When it comes to actually measuring these utility costs, definitely highlight this rule in your notes. The cost of production and distribution of utilities is determined based on normal capacity or actual capacity utilization, whichever is higher. Always go with the higher number. And what about unabsorbed cost? Any unabsorbed cost is strictly treated as an abnormal cost. Oh, and quick tip, if the factory has a standby utility system, its cost legally includes the committed costs of maintaining it.
And finally, Section 6, CAS 9, Packing Materials. Time to ship the product.
Our labor built the product, our utilities power the machines, and now we gotta ship it out. CAS 9 is honestly very straightforward. It dictates the classification, measurement, and assignment of packing material costs. The most crucial detail to remember here is the strict classification rule. Packing materials are divided entirely into primary packing materials and secondary packing materials. Period. Just like the other standards, CAS 9 relies on this strict classification to ensure absolute uniformity in the final cost statements.
Okay, take a mental screenshot of this cheat sheet right here. We've covered a lot of ground today, from the nuances of direct versus indirect labor and abnormal idle time in case CS 7 to those strict capacity rules in case CS 8 and the primary/secondary packing classifications in case CS 9. But look closely at that final column. Despite dealing with completely different business resources, all three of these standards share the exact same primary objective: to bring uniformity and consistency in determining costs with reasonable accuracy. Which brings us full circle to that big question we started with. As you hit the books for your CMA exam, try to remember that these aren't just annoying, arbitrary rules to memorize. They are literally the essential tools of business transparency. Because if cost accounting standards didn't mandate this strict uniformity, how would investors, or even management, ever truly compare the efficiency of two competing manufacturers? Keep that in mind.
Look, if you're gearing up for your cost and management accountancy exams, you already know the struggle. Those cost accounting standards can feel like a massive, impenetrable wall of dense regulatory text, right? Well, today, we are going to break that wall down. We're transforming all that text into your ultimate exam prep playbook, zooming in specifically on Cost Accounting Standards 10 and 11. I am super excited to guide you through this because, honestly, once you see the logical structure behind these standards, the whole thing just kind of clicks into place. Okay, let's just jump right in with a real multiple choice question. This is exactly the kind of thing you're going to see on test day. The question asks, what does CAS 11 emphasize regarding the treatment of abnormal administrative costs? Is it A, inclusion in cost calculations, B, exclusion from cost calculations, C, separate disclosure in footnotes, or D, attestation by external auditors? Hold on. Don't answer it just yet. Keep this question tucked away in the back of your mind as we work through the material. Here is our quick roadmap for today. First up, an intro to CAS 10 and 11. Then we'll hit CAS 10 direct expenses, followed by CAS 11 administrative overheads. After that, we'll cover the rules of cost assignment, presentation, and disclosures, and finally wrap up with our CMA exam key takeaways. All right, Section 1, Intro to CAS 10 and 11, setting the regulatory stage. Let's go. Moving right along to Section 2, CAS 10, Direct Expenses, Identifying Traceable Costs. So getting the distinction between direct and indirect expenses right is literally the bedrock of calculating true product profitability. It's exactly why these standards exist in the first place, to give everyone a uniform, consistent approach to cost reporting. Now, looking at CAS 10, the official text highlights a crucial concept you've got to know for the exam. Direct expenses are those expenditures that go beyond your standard, everyday direct material and employee costs. We're talking about additional, specific, chargeable expenses like those for bought-out resources. You might not always see a physical trace of them in the final product, but they are absolutely tied to it. To get a bit more technical, paragraph 4.4 explicitly defines these. Direct expenses are those relating to the manufacture of a product or the rendering of a service, which can be identified or linked with the cost object. And again, the text specifically notes this is other than direct material and direct employee costs. This clear-cut identification is absolutely vital for accurate reporting. Basically, if you can confidently pin the cost directly to the object, boom, you've got a direct expense. But that brings up a really good question. How far are we supposed to go to prove that link? Well, the answer is right here in paragraph 5.1. It dictates that identifying direct expenses must be based on traceability in an economically feasible manner. So what does that mean in plain English? It means, can we track this cost to a specific job without spending a total fortune doing it? If tracking the cost is actually more expensive than the expense itself, it's not economically feasible, right? In that case, it probably just gets pooled into your overheads. Now, let's look at some exact examples straight from the standard because you absolutely need to memorize this list for the exam. Things like royalties, job charges, hire charges for specific equipment, special designs, software services, and traveling expenses for a specific job. The standard also includes the amortization of lump sum expenses if they're tied to an estimated output. The major keyword to look out for here is specific. If it's for a specific job, you're looking at a direct expense. Okay, Section 3, CAS 11, Administrative Overheads, Managing the Back Office. Pivoting away from the production floor and into the back office. Paragraph 4.3 defines administrative overheads as the cost of all activities relating to the general management and administration of an entity. So we are talking about the costs of shared services, infrastructure, and general management. Think about the utility bills for the corporate headquarters, legal fees, office supplies, or the salaries of your executive team. The business literally cannot survive without these, but you obviously can't trace the CEO's salary directly to one single little widget rolling off the assembly line. Listen up, because this right here is a massive exam trap. CAS 11 explicitly states that administrative overheads exclude production overheads, marketing overheads, and finance costs. And it goes further. fines, penalties, damages, imputed costs, and please pay really close attention to this one. Abnormal administrative costs are completely excluded. Seriously, highlight that in your notes. Oh, and by the way, imputed costs and finance costs, those are explicitly excluded under CAS 10 for direct expenses, too. Section 4, Rules of Cost Assignment. Where do these costs go? When we compare the two standards side by side, the rule for CAS 10 direct expenses is actually pretty straightforward. They just must be directly traceable to the cost object in an economically feasible manner. Rented a crane specifically for Job A? Great, that cost goes to Job A. But for CAS 11 administrative overheads, well, we don't have that direct traceability. So we have to rely on a couple of guiding principles. We assign them based on either cause and effect, meaning the activity directly causes the cost, or we apportion them based on the benefits received by the different cost objects. I highly recommend taking a mental screenshot of this table because it maps out exactly how different types of admin overheads are assigned based on specific drivers from the source text. For shared services, you assign the cost based on actual usage. For infrastructure, since it's basically a fixed cost just sitting there waiting, you assign it based on readiness to serve, like installed capacity. And for general management, you've got to use a rational basis. That could be something like the number of employees, total turnover, or investment size. Nailing down these specific drivers is absolutely key to mastering CAS 11. Section 5, Presentation and Disclosures, Showing the Work. Both CAS 10 and CAS 11 share some pretty strict reporting requirements. First off, if these expenses are material, they absolutely must be presented as a separate cost head in your cost statement. You can't just sweep them into some vague miscellaneous bucket. Also, any disclosures you make need to be material, significant, and quantifiable. Now, you do have some flexibility on where they live, the body of the statement, the footnotes, or even a separate schedule, but you must, without fail, disclose your basis of distribution. You're also on the hook to transparently disclose any subsidies, standard cost variances, related party transactions, penalties paid, and abnormal portions. Transparency is the whole name of the game here. And finally, Section 6, CMA Exam Key Takeaways, Closing the Loop. All right, let's bring back that multiple choice question from the very beginning of our explainer. What does CAS 11 emphasize regarding the treatment of abnormal administrative costs? Take a second. Do you have your final answer locked in? If you guessed B, exclusion from cost calculations, you got it. If you remembered our big exam trap warning, you totally nailed this. CAS 11 is super clear that abnormal costs, along with fines and penalties, have to be completely excluded from administrative overhead calculations so they don't warp the normal operating costs of the entity. You guys crushed it today. But before we wrap up, I want to leave you with a somewhat provocative thought to chew on as you keep studying. The whole core difference between these two standards really just comes down to what is economically feasible to trace, right? Well, as AI, software, and digital tracking technologies get cheaper and more advanced every single day, will that line between indirect overheads and traceable direct expenses eventually just vanish? Think about it. If we can track every single paperclip and fraction of a watt of electricity to a specific job for literal pennies, will CAS 11 even need to exist in the future? Keep that in the back of your mind as you watch the accounting field evolve. Thank you so much for joining me on this explainer. Keep up the fantastic studying, and I will see you in the next one.